Welcome back to the channel. As always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to speak today about a stock called L3 Harris Technologies. This is a well-known heavyweight defense and aerospace stock. Market cap 40 billion and trading at 17 times forward PE. Why am I looking at this stock at the moment? Well, as you can see here, the stock had a pretty good run since late 2023. And then at the end of 2024, shortly after the election, the price decreased by quite a bit. So it went from 260 to the current price of 207, but of course reached lower lows than that. And I think despite the recent bounce in prices that we have seen, there is further room for this stock to go down. First of all, this down leg here came about because of the concerns from the investment community in terms of the efforts by Elon Musk in terms of cut defense spending and increase efficiency in the government. Now, that was the perception from the investment community. But the hard facts are that the company has been struggling for quite some time to deliver continued growth as many of its peers have been. So, for example, if we look at the financials, we can see that top line revenue has been shrinking and is expected to continue shrinking in terms of the growth, the revenue growth that the company continues producing. At the same time, gross profit is not as high as other competitors in the sector. And we have seen as well how other items such as EBIT and net income are actually expected to decrease. So management has been quite complacent about this and has talked in management and earnings calls about a narrative that is quite benign in terms of the how the company is dealing with these challenges. But nevertheless, we have a stock here in front of us which is experiencing persistent program execution problems in space and F-35 segments, coupled with underwhelming organic growth. So those facts don't align with management optimistic narrative, right? And it is clear that investors are not buying this narrative because the stock just continues to go down. Now, I think some catalysts that we could see down the line could be reduced spending or the company simply not being able to keep up with competitors in order to service its main clients, which are the Department of Defense, NATO, and other intelligence agencies, right? So we saw, for example, how yesterday uh, Boeing was awarded a contract worth over 20 billion to develop the F-47, which is going to be a new manned fighter jet. But this is not the kind of opportunities that this company seems to be getting. They seem to be falling behind compared to, for example, all the stocks that we discussed previously in the channel, which are working on drone technology and so on. These guys are still working in a very sort of legacy kind of business, which is simply not growing as much. And at the same time, they have reached a premature stage. Now, some of the risks are, first of all, its dividend status. However, I do think that the current dividend yield is not enticing enough to keep investors coming back. And also, when we look at the performance expected for this year, the earnings are expected to shrink in 2025, with subsequent years having a low single-digit growth, which is below sector average. So when we couple all that, we have a price target, which I think shows room to the downside, right? I think this price target is going to continue moving down as the average has been for quite some time. But to me, what's also quite interesting is the fact that the analyst community, there's 23 analysts at the moment covering the stock, and there is one strong sell, which shows a lot of conviction against the consensus, and to me signals that some of these analysts that we see here in the buy and hold categories could quickly change the mind as additional negative news come into the news flow. Because again, the fundamentals are simply not there. Sales have been stagnating for a while. EBITDA expectations have been dropping. EBIT is being quite volatile too. EPS certainly has decreased a lot, and EPS gap remains constant. So all that, I think it leads us to a situation where the volatility of earnings could be quite significant. This is a stock at the moment that has an implicit volatility on the options market, even if we look far out at a month like August, or just about 25%. So I think there's an opportunity here to jump in to add some short exposure into the portfolio at a pretty good price in the options market and work out a calendar to get exposure to the August month, perhaps raise some credits in the month of April before they announce earnings, and then we get a pretty good payoff. Hope you enjoyed the video. See you soon.